how to make $100 a day trading the supply and demand trading strategy using a small account. We're going to break down all of these trade reviews here on this data sheet, and there's a couple things that really jump out that you need to understand on this sheet. Not only that, we're going to dive deep into a couple of the trade reviews talking about the trade management, adding to these positions on how I made $100 a day and how you can do it too. A lot of great lessons, a lot of great trade reviews. I appreciate if you guys like the video, subscribe. If you have any questions, you can reach out to me on social media at MoneyballAustin. Let's get into this. Okay, now that the hardest part of making this video, which was the intro, is now complete, how to make $100 a day, how to make $10,000 a day is now complete. Let's break this down because the whole goal for this was to make $100 a day using a small account. So for the week, we're ending the week up just over $400. That is absolutely awesome. But that's not what I want to talk about. I want to talk about how we got there. So we're going to break down a lot of these lessons here on this sheet, and then we're going to look at these trade reviews. The first thing that you're going to notice, and it's a very important lesson that you guys need to understand, is keep your losers small and your winners large. So if we look at all of the losing trades, minus $9, minus $59, minus $4, minus 28, minus 28, minus 25, we're keeping the losers very small. And if we compare it to our winners, plus $220. Look at all those small trades, very small, right? Plus $120, plus $200, plus $100, right? We're keeping our losers small, we're getting out of these losing positions early, and we're letting our winners ride. We're adding into our positions. We're letting our winning trades play out. Okay, that's a very important lesson that you need to understand. I'm going to show you how I'm managing these trades, because when people talk about risk management, when you hear people talk about risk management, they're not talking about risking the same amount per trade. That's what we are doing. If we look at how much we're risking basically the same amount per trade. Okay, on every single trade. We're not triple X leveraging or quadruple X leveraging because we lost a trade. Okay, we're keeping the risk relatively the same depending on the quality of the setup. Okay, but when you hear people talk about risk management, they're not talking about risking the same amount per trade. They're talking about, yes, making sure that you're managing risk, like you can afford to lose 1% or 0.5% or 2% per trade, all right, consistently. So you have the same risk management, but what they're talking about is when are they getting out of their trades? When are they closing their trade early because they think that the trade's going to go against them? When are they adding to their position? When are they moving their stop to break even, right? Why are they entering this trade versus not entering this trade that other traders will see? That's what they mean when they're talking about risk management, okay? So that's what the first thing you're going to notice, which I just broke down, is the winners are a lot larger than the losers. And I'm not going for, 20 to 1, 10 to 1 trades. These are all under 2 to 1. I just know how to manage the risk. I know how to manage my stop. I know when to get out of my trades when I know it's going to go against me. And we're going to break that down when we look at the trade reviews. Okay, so that's the first thing that we're going to be talking about. The other thing that I wanted to break out to you, I'm canceling a lot of my trades. I don't like personally having 20 pending orders. I don't like leaving pending orders sitting there. All right, so if I have a pending order and it's not near to my zone or it's not coming back, then I just cancel it. I get out of the position, okay? So that's the other thing that you're going to notice. Notice the market that I'm trading. Gold. Everything was in gold. Everything was in gold. We look over here, gold. All right, I'm not going off and trading 20 different markets. I'm focused on one market and I'm getting all of these opportunities. And I ended up walking away with $400. All right, small account, pretty simple. We could see here, I don't know what we're looking at here, but the graph goes up. All right, that's a fun, exciting graph for the week. Let's talk about some of these trade reviews, all right? And let's talk about how I'm managing these trades, why I'm getting into these trades. These are all of the exact same trade setups that I've talked about in my video. I will pop that up on the screen and I will have it in the description below of the exact setups that I am taking here in this video. The first one I want to talk to you about is gold. Once again, these are all going to be on gold, okay? The reason I'm looking for buying opportunities, gold is up over 30% for the year. Gold right now during this trade was taking at all-time high levels. We are in an uptrend. Gold has just made like a 1% move over the last 12 hours. and we are pulling back into this area of demand of where it's making higher highs and higher lows. So if you can see here, each time it's gone into this area, it's made a nice little higher high pivot point. So when prices pull back over here, I was like, great, I want to be looking for buying opportunities. Not only that, we could actually see how the buyer stepped in. Let me erase this so that you guys can see this. This was a very strong red candle coming back into this position, okay? I noticed this large red candlestick ended up reversing quite quickly. That was basically telling me that the sellers were unable to hold, and we saw a large stack of buyers coming into the market. So that's when I saw that, with all of those things considered in my top-down analysis, I go down to my entry time frame, and this is what I saw. This is what we call a confirmation 2.0 setup. This is when it went down low on the range, and we saw prices quickly rallying to the upside. Now, I was very bullish for the day. Like I just explained, looking at that higher time frame, I wanted to look for buys and all that type of good stuff. So at this point, when I saw prices going back into this zone over here, I noticed, okay, we tested once, we tested twice, going deeper into the zone, and then we finally broke it here by going above. With all of my top-down analysis in my head, I'm bullish this thing. I'm trying to get long now. I ended up buying the pullback back here, back into this demand zone as a confirmation setup, as prices are going lower low, lower high, and now we're making higher highs and higher lows, as well as confluence with my higher time frame. I am buying long back into this area of demand. Prices start going up, that's fine, comes back down and ends up going range bound. Okay, at this point, when it was going range bound, let me delete this so that you can see, this is talking about risk management. When it's going range bound like this, I had my original stop down here. Okay, this little red dot. When I saw it going like this and it was unable to really break highs and it was going range bound, I was like, okay, if this thing breaks to the downside, it's probably going to continue down. So at this point, this is when I started moving my stop up. Okay, I'm saying, hey, I'll accept that I'm wrong if prices end up blowing through, because I've been trading this strategy for a long time. These are little things that you notice. All right, so I end up moving my stop to the upside. But luckily, price ends up going in my favor. Let me delete this so that you guys can see. This is very important. Trade management, it's very important. Okay, once I started seeing this very strong candlestick being printed and this one, this is when I'm adding into my position. All right, I love my higher time frame, my top-down analysis, why I'm getting long. We're breaking above these highs now. That's held for the last 3 to 4 times. Okay, we're breaking above it, making strong closes. I'm adding to this position. And so this is when I start adding into my position. Okay, I have still my stop loss here. I'm adding into my position. And then as it's going up, I'm slowly getting out of my take profits, closing some contracts here, some contracts here, some contracts here, and contracts up there. All right, and I'm also moving my stop up as it's making higher highs and higher lows. Okay, and I'm ended up altogether closing here on my final trade. Okay, let's talk about another one. Let's talk about that we spent a little bit long on that one. Let's talk about this one. This was a short setup that I ended up closing early. Okay, this little supply zone right up here, great little rally-based drop supply zone, selling off. Gold is selling off hard. I'm trying to enter a short on this position with my stop above here. I ended up getting short right here on the pullback. Okay, but what I noticed was prices were like still creating higher highs, not like higher highs, but they're making very strong bullish candlesticks. That is not something I want to see if I'm in this position. So I'm not going to sit here and cross my arms and say, nope, I'm in it, I'm in it. Nope, it's either I lose or I take profit. No, if this trade is no longer telling me, hey, it's not a good idea at being long, at being short, this thing is very strong, I want to close my position, okay? So that's what I did. Originally, I had my stop up here, right? I moved it down to this point to say, hey, you know what? This thing's very strong. If it's going to continue to rally, I want to get out of this thing. I just saved myself a full loss, and I'm walking away with a 50% loss. This is how you're able to see, you know, what we see over here, $9 loss. $50 loss, $4 loss, $28 loss versus these $200 wins. All right, it's the exact same position, but I'm closing these trades early because I'm aware, based off of lots of experience, that if prices eventually do this, I probably want to close my position. So if we look at this supply zone, I was selling this pullback back into here. Okay, I ended up getting short here on my supply zone. But what do you notice? Originally, my stop was up here. Okay, what do you notice? Price comes in, fills me, starts falling. Okay, great, it's falling. But now it's making higher highs and higher lows. It's going deeper into my supply. That's not what I want to see. Okay, ends up going back down. Now it's pulling back into that area where it made a new higher high. Why would I want to remain in this position now? So what I'm going to do, I'm not just going to leave my stop there. I'll say, hey, you know what? If it's going to make a new higher high, I'm going to move my stop right to here. I'm going to get out of my losing trade early. All right, it's no longer going in my favor. It's making higher highs and higher lows. It ends up stopping me out right here and then continues to eventually move on to a full loss if I held on to that position. Okay, let's look at another one. Let's look at another loser. It's great. Same thing. Okay, we'll look at a winner after this. We get short here, prices start falling. I know based off of a lot of experience, if prices continue to come back up into this supply zone and break this structure, it's going to continue to go up. Okay, so what I'm doing is I'm not just leaving my stop there, I'm going to move it down a little bit, all right, and take a small loss. That is trade management. Let's look at a winning trade. All right, was there one that I added into? I mean, we could look at the one more. So on gold, at this point, selling off very hard. I flipped my script from looking for longs. It's selling off very hard now. I'm trying to get short on this thing. In this case, on this supply zone, I was just selling back into this little continuation pattern to the downside, okay? And then getting out, I think like a 1.5, 1-to-1, something like that. But originally my stop was right here. As it is falling to the downside, like at this point right here, I'm cranking this stop to here, all right? Because I know if it's going to reverse, it's just going to blow through the zone in a high chance. Okay, so this is what I'm doing. I'm managing my risk. I'm not quadrupling my next trade risk because I lost the last one or two in a row. Okay, keeping the same risk, but I'm adding to maybe my winning position. I'm closing my losing trades early. All right, this is based off of time and experience, right? Okay, these are all of the exact same setups that I talk about in a lot of my videos. Okay, and I said I was going to drop that video I mentioned earlier in the description below, breaking down these exact setups. Okay, but you have to learn how to properly identify and trade these setups, right? But you can see here how important it is at identifying quality setups. Tyson, 19 winners, 3 losses. Okay, right here, 19 winners, 3 losses. Versus a poor quality trade, 1 winner, 5 losses. We look at another trader, okay? How to identify sideways markets and trending markets versus counter trend markets. All right, there's a big win rate difference between winners and losers if you're trading with the trend or in a sideways market versus counter trend. Talking about quality setups versus poor setups, 61% win rate versus 22% win rate. All very important stats to know if you are going to be trading this strategy. You got to be able to identify high quality setups, okay? If we look over here, this is a trade review, I think, from Saskia. Price inside higher time frame supply, looking for selling opportunities, nice little confirmation short, very strong and balanced, breaking pivot point zones, all right, and selling the pullback back into there. But that's why, you know, having the course material is important. Then you start taking these trade setups, and over the course of 30 to 40 trade reviews, you're going to notice what a winning trade setup has in common versus a losing, right? So then once we do this one-on-one, I start telling them, focus on your winning trade setups. But now, going forward for the next 20 trades, because you now know what you need to look for in a quality setup, I want you to start thinking about how can you minimize your losses? Can you add to your winning positions? When does it make sense for you to be moving your stop down? That's when I have a conversation with them because they understand the core trading strategy. They know what a good setup is. Okay, then we can have that conversation of keeping your losers small and your winners large. Okay, which is all very important, as we saw, you know, when we're looking over here, looking at the profits, right? $500 a week, $2,000 a month. Hey, can't complain. All right, that goes a long way for a lot of people around the world. An extra $2,000 a month. It can be done. This was done with a small account, I think like $3,000. You can do it too. Just takes a little bit of hard work and discipline. So if you're ever thinking about joining the Moneyball Trading Program, check that out in the link below and you can join there. I'd love to have you. I appreciate if you guys like the video, subscribe. And if you have any questions, reach out to me on social media at Moneyball Austin. I will see you later. Cheers. Bye-bye.